make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show. The Peter Schiff Show.
This episode is sponsored by Momentous. If you're interested in making a true investment in your health, go to livemomentous.com and use code GOLD to get 20% off your new routine today.
Well, Trump Mania continues. The aftermath of the, I guess, surprise to a lot of people win by Donald Trump. The markets continue to rise. The NASDAQ, the Dow, the S&P all hitting and closing at new all-time record highs today. Again, nominal highs, nowhere near their highs if you price them in real money. In fact, the Dow traded above 44,000 for the first time ever, although it didn't quite close with that handle just below. But big gains on Wall Street, big gains for the dollar. I'll discuss that in a minute. But, you know, I wish that I could share in all this unbridled optimism about, a Trump boom. But, you know, I've seen this before with Trump. Trump has been president before, and he came into office again, making many of the same promises that he made this time. He was going to make America great again. We were going to get rid of the trade deficits. We were going to reindustrialize the country. It was going to be with deregulation and tariffs. And none of that worked. The trade deficits grew, as I said before, under his presidency. The budget deficits grew under his presidency, even before COVID. And they would have continued to grow even if we didn't have COVID. But we did, and they continued to grow, and they continued to grow under Biden. So we have a much bigger trade deficit, all-time record highs. We have much bigger budget deficits, all-time record highs. And as I said on the last podcast, Trump is coming to office when the economy is in much worse shape than it was in 2016, with interest rates much higher. They were 0.5% then. They're 4.5% now on the Fed funds. The 10-year Treasury was 2.5% then. It's 4.3% now and rising. We've got a $36 trillion national debt, not a $20 trillion national debt, and annual budget deficits that exceed $2 trillion a year, more than triple the deficits he inherited from Obama. So I don't see the optimism. I don't see the spending cuts. It's the same Congress, too. I mean, there's a few players who are different. But remember, Trump had a Republican House and a Republican Senate for the first 2 years. And what did they do? They increased spending. Do you think those same congressmen and senators have had a complete epiphany and now they want to cut spending? No, they're not going to do that. Yes, again, Elon Musk is here, but he is not in charge of the budget. He may be able to identify some waste, fraud, and abuse, but that is a spit in the ocean compared to the spending that is completely sacrosanct and off the table, not just by Congress, but by the president. You know, as I said, if Trump really wants to do the right thing, if he really wants to make America great again, then he's going to have to govern the opposite of the way he campaigned. And I just don't think that that's going to happen. You know, Trump would have to maybe have a fireside chat, you know, in front of the American public and level with them. He can say When I was running for president, I promised a lot of things. I promised a lot of tax cuts, and I really wish that we could deliver on that promise. But unfortunately, I've taken a deeper dive. I've spoken to some of the top economists from, the Austrian school. And it turns out that we really can't afford to give all these tax cuts. In fact, we really need higher taxes if we can't get some serious cuts in spending. And so that's what we're going to try. I'm going to ask Americans to pitch in and tighten their belts. I know you've been struggling, and it's going to get worse for a while. But trust me, if we swallow this bitter tasting medicine, in a couple of years, we'll be on the right track. But, it's going to be tough. We're going to have to make some major cuts to Social Security and Medicare. And I know that's going to be difficult for a lot of people who have been counting on the money, but, the money's not there. There's not much that we could do about that. We're going to have to, cut other spending across the board. We're, make cuts to military spending too. Interest rates, unfortunately, have to go up. I mean, I know I love low interest rates, but the economy needs higher interest rates because we don't save enough. And we need to make things again. We need to manufacture. I mean, I was correct about that, but the transition is going to take longer than I thought. And in order to facilitate it, we're going to have to rebuild our savings. So we're going to have to spend a lot less, borrow a lot less, and save. And we're going to have to go back to work. We're going to have to roll up our sleeves and work. And I know it's going to be tough, but we're going to deregulate. We're going to make it easier. We're going to remove a lot of regulations, assuming I can get this agenda through Congress. But I'm going to fight, with every fiber of my being to try to get the Republicans on board with an austerity program of, cutting government spending and getting us on a sound fiscal footing so we can rebuild and really, truly make America great again. There's no way Trump's going to make that speech. He's not going to do that. He is going to do exactly what he did the first time he was president, except worse, right? The tax cuts that are on the table now are much bigger than anything that he proposed because he wants to keep all the tax cuts from before, right? He wants to extend the tax cuts he already has, except he wants to bring back the SALT deduction, right? That was one of the things that was in the original Trump, tax cut. A trade-off was, you can no longer get a full deduction for your state and local taxes. They capped it at 10. Well, he's promised to get rid of that in the renewal. So it's an even bigger tax cut than the original one. But on top of that, right, he wants to exempt tips, overtime, Social Security, policemen, firemen, veterans. I mean, all the various tax breaks that he's thrown out there at a time when the deficit dwarfs what it was, and the deficits dwarf what they were when Trump first came to office. But it all sounds great, and people are all optimistic. Yeah, my taxes are going to get cut, and Trump keeps talking about how great the economy was when he was president before. It was the greatest economy in the history of the country. And now it's the worst economy in the history of the country. And that they're just, they're separated by just a year or two. And the whole difference between we went from the greatest economy in the history of the world to the worst economy in the history of the world, just because we had Harris and Biden for 4 years. I mean, if the economy really was the greatest that it's ever been, there is no way it could have been wrecked so quickly by Biden. I mean, you can't turn the greatest economy in the history of the world into the worst economy in the history of the world just with one Inflation Reduction Act or one CHIP Act. Yeah, I know they were bad bills, but a strong economy could have absorbed it. The problem was we didn't have a strong economy. We had a bubble. We had a fragile economy. In fact, we've been blowing a bubble in this economy ever since the 1990s. Greenspan is the architect of this house of cards. He's been blowing all the air in, and every president going back to Clinton has been hiding behind this bubble and has been taking credit for the fake economic growth that has been a consequence of this ever-expanding bubble. And all Donald Trump is hoping to do is to blow more air into it and hope it doesn't pop while he's still in office, right? That's what he's trying to do. Just keep this thing going with more spending, more tax cuts, more debt, right? And just, get more heroin for another high, because, we're coming down right now. People are hurting from all these policies. But the problem is, and people are, look at the consumer confidence. I pointed this out before, and it came out again today, and the confidence numbers are coming up. But people are in for a big letdown, because all the problems that they elected Trump to solve are going to get worse under Trump. They've been getting worse. All the government statistics have been lies. They are designed to mask what's really happening beneath the surface. That's why Trump won the first time. That's why he lost the second time, because the economy was not good like he promised. And so voters wanted to change. And now he's back in office because they still want to change because things got worse. Look, if Donald Trump had been reelected and J.D. Vance or whoever was his VP, in fact, I think he ran again with Pence, right? So I guess Pence would have been the VP all along. So maybe Pence would have been at the top of the ticket, or maybe somebody else, who knows who would have been the Republican nominee this time if Trump couldn't run again, because, he would have been maxed out with the 2 terms. But my bet is that if the circumstances were identical of the economy, and a Republican was running, a Republican was saying 4 more years, we would have elected a Democrat, regardless of who was at the top of the ticket, even if it was Harris. But it probably never would have been Harris, because she couldn't have won the nomination. Somebody with more charisma, more articulate, would have been up there. And whoever the Republicans put up would have lost. Look, if you look at all the elections that happened in the last year, all around the world, the incumbents have lost every election. Doesn't matter what their party affiliation is or what their philosophy, they have thrown the bums out all over Europe, right? They got rid of the incumbents and they brought in the opposition. Why is that? Right? Because people are suffering because central banks all around the world made the same mistakes. They printed a ton of money and they enabled the massive growth of government spending and debt. And that is weighing on the real economy, regardless of what the statistics, how it whitewashes it. And so everybody wanted to throw the bums out. I guess we got lucky, because most of the European countries, the guys that were in charge were the right-wing party, the party that's more pro-business. And so they replaced it with a more left-leaning socialist type party. In America, we happen to have one of those already in Biden. So when we threw out the incumbent, we went for Trump. So we got a better deal in that, we have Trump as opposed to, somebody from the far left, like you have in a lot of other countries. But the problem is, despite all that rhetoric, and yes, we're going to get some tax cuts, and hopefully we get an end to, the war in the Ukraine, and we'll get some deregulation, which, we did get under the first Trump term. But I don't think, given the enormity of the bubble now, I don't think that he can get out of Dodge, that he can finish this 4-year term and just pass the baton to a Democrat, because, the economy will be worse as far as beneath the surface in 4 years than it is right now, even if we don't have a complete collapse. But the thing is, can we make it? Will the bond market allow the deficits to skyrocket under Trump? I mean, if the budget deficits go to $4 trillion a year, I mean, can Trump really add $20 trillion to the national debt over a 4-year time period? I mean, will the bond market allow that? People seem to be ignoring, with all this talk about an economic boom, the impact of rising interest rates to temper that, because we have so much debt. How can we survive all of the extra interest payments? And, the tax cuts, right? A lot of people say, well, tax cuts are pro-growth. They're not pro-growth if they're targeted to increase consumption. The way that tax cuts generate economic growth is they lead to more investment, not more spending, more investment. So if I have money left over that I was going to send to the government, but now I have it and I can invest it, well, that's good for the economy. But if I just spend all the money that the government was going to take, I haven't helped the economy. I mean, maybe I've helped myself because I can spend the money instead of the government or whoever the government gave it to, but it's still spending. It's not investment. The other way that tax cuts can help is the motivation to work, right? So let's say taxes are 90%. You have a marginal tax rate of 90%. If the government cuts it to 50%, there's a good chance that there are people who were not working, right? They worked a certain amount, but once they got to the 90% bracket, they kind of stopped working, right? Why keep working? I get 10 cents. The government gets 90 cents. I'd rather have the leisure, right? I'm not going to work for 10 cents. The leisure is more valuable than the dime, right? But if the government cuts the marginal tax rate from 90% to 50%, all of a sudden somebody might think, well, all right, if I can split it with the government, there's enough in it. I'll work a little more, right? So you get some extra productivity. And so in that case, like the Laffer curve, you actually get more tax revenue with a lower tax rate because the individual is motivated to actually do more work. I mean, if you think about it in its extreme, if the tax rate is 100%, the government's going to collect no income from 100% tax. Nobody is going to work if all the income that they earn goes to the government. So at 100%, the highest possible rate, you collect zero. Now, if the tax rate goes to zero, well, they also collect zero. So there's obviously some point at that curve where you maximize tax revenue. It's not at 100 and it's not at zero. It's somewhere in between. And the question is, where are you on that curve to find out if you cut rates, will you end up with more or less tax revenue? But I would argue that the rate cuts that they're talking about to the marginal tax are insignificant with respect to movement on the Laffer curve because, they're talking about marginal rates, whether they're 38, 39, 40. I mean, it's not really going to move the needle on people working harder, right? Because it's not enough of a difference. So it's more likely that a tax cut will produce less revenue. Now, there are some tax cuts, that may be growth oriented that will be slipped in there as well. Business tax cuts, lower corporate taxes. I mean, lower corporate taxes are a good thing because now corporations, in theory, have more money, which they could use to invest in plant and equipment and grow the economy. But the problem is, if you have tax cuts, but you don't cut government spending, you just have a bigger deficit. And now the government has to go into the capital markets and borrow the money that it no longer collects in taxes. And that undermines economic growth. And it's actually worse. When the government borrows, it's even worse because 100% of that borrowing has to take away from investment because there's only so much investment capital. There's so much savings to go around. And whatever the government takes, the private sector can't. I mean, I guess in economics, they call it crowding out. So when the government collects taxes, a lot of that money comes from consumption. The government is taking money away from people that they would have spent it. And so the government spends it instead of the consumer, but it doesn't have as deleterious effect on investment. But when the government borrows money, that has a much more profound negative impact on the economy because it's reducing the capital available to grow the economy. So I think the added deficits under Trump will do more damage to the economy than the benefit from the lower taxes. And of course, the tariffs are not going to work in the sense that they're not going to turn our trade situation around because they didn't work before. In fact, almost all the Trump tariffs that were imposed under Trump were never repealed under Biden. Yet despite all those tariffs, we have the worst trade deficit in our history. We have the biggest merchandise trade deficits ever with the tariffs. So why would more tariffs work any better than the tariffs we got right now? They are not. So as much as there's all this euphoria going on, and I wish I could share in the optimism, I just can't do it. Anyway, I got a lot more to talk about, especially the rate cut that we got which I expected, and we got it on Wednesday. And I'm going to talk about what Powell had to say at the presser after this quick commercial.
We all want to perform at our best, but sometimes the nutrients we need are hard to get through diet alone. In a perfect world, we would all get enough of the nutrients we need for high-level performance from our diets alone. But this is the real world, and the truth is everyone could use some help in continuing to find a new personal best day after day. The Momentous 3, protein, creatine, and omega-3 are the 3 nutrients that expert research shows are the foundation of long-term health. Taking them daily supports every cellular function of the brain and body, from muscle recovery and growth to focus and energy. The Momentous 3 is the easiest way to drive the biggest impact on health span. Momentous also takes it a step further. As a supplement company determined to bring trust and transparency to a space lacking both, all their formulas are designed with human performance experts and are NSF and Informed Sports certified for use by professional and collegiate athletes. That means sourcing ingredients for quality, not just what's cheapest, and what's on the label is exactly what you're getting. I just received the delivery from Momentous because I take my health and performance seriously. So if you're interested in making a true investment in your health, why not join the best in human performance and be part of the change in raising the bar on supplements? Just go to livemomentous.com, MONENTOUS.com, and use the code GOLD for 20% off your new routine today. That's livemomentous.com with promo code GOLD to get 20% off.
Before I get to the Powell conference and the rate cut, I want to mention again a little bit about the markets, because I was on a Zoom call earlier today with Total Access members at Schiff Sovereign, and it was a really good call. And again, I've been encouraging people on this podcast to go to Schiff Sovereign and sign up for the free newsletter. But there is a premium service, Total Access, and we have these calls, I think monthly Zoom calls, and I take Q&A, and it's with on Zoom, so it's a lot better than the Q&As that I've done, the free ones that I did at locals, and people would just write in questions, and then we're all together, we're talking face to face in a Zoom room. But somebody asked one of the questions that was asked. I thought it was a very good question, so I wanted to also address it in the podcast, because one of the members was a long-term client of mine, and obviously a Trump supporter, and happy. I supported Trump too, and again, it's just it to me, I've got mixed feelings, because I know that how it's going to go, and so I have a hard time sharing in the joy. I mean, I'm glad that the nation, voted for Trump and not Kamala. And, the freedom of speech stuff was important. And, avoiding World War III is probably, a bonus. And so there's a lot of other things that I think are important, by electing Trump. But he had said to me, he said, look, Peter, I know that for a long time you've been saying that eventually you want to, switch back into the U.S., right? You want to get out of the foreign stocks and you want to invest in the U.S. I mean, do you think we should be doing that now, now that, the game has changed and we've got Trump? And I had to explain, I'm going to explain now, that the game hasn't changed. It didn't change when we elected Trump the first time. Why should it change now? Especially when the problems are so much bigger and therefore so much less likely to be solved without a crisis. In fact, what's going on in Argentina came up and said, hey, well, Milei, he's doing the right thing. Yes, he actually campaigned on austerity. He campaigned on cutting government. He prepared people for some short-term pain. Trump didn't do any of that, and the people don't want any of that, because they haven't had it bad enough long enough to be willing to accept that. I mean, they had tried so many government solutions that didn't work in Argentina that they were finally ready for something truly different. Americans are still wanting, the freebies. They still think that, the trees can grow to the sky, and they don't, we can just keep on spending and borrowing. But as far as my long-term hope to get back into the U.S. stock market, Yeah, that's been my goal for a long time, and it hasn't happened. Of course, the U.S. stock market's been going up too, so I would have been better off in the U.S. stock market than in the foreign stock markets, even though our strategies have outperformed the benchmarks, which is we've done better than a lot of the benchmark foreign markets, but none of the benchmarks have come close to the U.S. because the U.S. is a massive bubble, and so is the dollar, and so the strength of the dollar has reduced the returns for Americans for international stocks. Now, my expectation is that the eventual weakness and profound weakness in the dollar will dramatically increase the returns for Americans who've invested in foreign stocks. But what I see now is not the environment that I was thinking that I would, switch to the U.S. To invest. What I'm waiting for is for the real crash to happen, right? For the dollar to crash, the markets to crash, for the deficit, fiscal chickens, the currency chickens to come home to roost. So we get a real crash, something like a 1929, although it, probably won't be a nominal, but we get a bad decline. We get or like we had in the early 1980s, at the end of the 70s, we get a big drop where U.S. stocks are actually cheap. I mean, they're historically expensive right now. So the time to load the boat with U.S. stocks is not when they're historically expensive. I'm waiting for blood in the streets, right? I want the collapse to happen. And then in that environment, I want the melee. I want the president and Congress to finally do the right thing, to finally make the real free market reforms, the cuts to government spending, the stuff that we need to really put the economy on a sound footing. Now, I know when we initially do that and the economy is in recession and everybody is pessimistic, that's when I'm going to be optimistic, because I'm going to know that this is the bitter tasting medicine that we should have swallowed a long time ago, but we just weren't sick enough to go for it. So in that environment, when the dollar is way down, the U.S. stock markets are way down, we're in a really bad depression environment. But I can see the light at the end of the tunnel, because I know that what we're doing is going to pay off in the long run. That's when I want to take my appreciated foreign currencies and foreign stocks and gold and all that, and I want to go in and buy America on sale. We're nowhere near that point, right? So I'm staying the course because I'm confident that at the end of the day, my strategy is going to prevail. So I would encourage people, because I know most of my clients don't have all their money in my strategies. Some do. I have all my money in my strategy pretty much. But a lot of my clients don't. They have allocations to U.S. stocks. And with me, they have their foreign stocks. I had a U.S. mutual fund at one time that focused all on U.S. stocks. And we kind of emphasized ones that did a lot of exports, but it was all a domestic portfolio. But I ended up shutting it down because my clients just didn't want to buy it. I mean, we had it out there for years and years, and I lost money because people saw me as their foreign stock broker, not their domestic stock broker. Okay, fine. I mean, that's a niche that I'm happy to operate in, because everybody should have some money abroad. But to the extent that you still have money in the U.S. stock market, fade this Trump rally. I mean, I don't know how many more days or weeks or even months it can go on. I mean, I have a feeling that the Trump honeymoon is going to end even before, he gets to the altar in January. But I would be selling into this and allocating more money. With the dollar now just rising these last couple of days, the euro actually got below 107 today. I mean, it's not on a new low for the year, but, it was just up at around 111, 112, 12 high before the election. So that makes foreign stocks cheaper. And of course, they haven't seen the big rise that the U.S. stocks have seen. So you could sell some more foreign stocks, because obviously your domestic allocation has now gone up and your foreign allocation is gone down. So I would move more money out of expensive stocks. Warren Buffett, right, supposedly the greatest U.S. investor of them all, is sitting on a pile of cash, and he's probably raising more as the market's going up. Now, he should be sitting on a pile of gold instead of a pile of cash, but I guess that's something that he doesn't want to do. But as a value investor, he just does not see value in the U.S. stock market, and I agree. But I think there's a lot more problems coming up for the U.S. stock market than Warren Buffett is willing to admit. I mean, he may see the problems, but he's not going to admit to them. Anyway, let me move forward to the Fed rate cut, which really was kind of lost in the noise this week. I mean, normally a Fed rate cut would be a much bigger event, but given it happened the day after the presidential election, nobody really paid attention. Now, I know there were some people who thought, well, maybe the Fed won't cut given, what's now happened, right? We're going to have all these tax cuts. Bond yields are rising. That should, push up inflation. Most people think that economic growth causes inflation. They're wrong, but that's what they think. And so you would think if, well, we're going to have a stronger economy, the Fed should reconsider the rate cuts and maybe pause or maybe even hike rates. And I thought, well, there's no chance the Fed's going to do that. Trump would go ballistic. They're going to cut. And that's exactly what they did. But, one of the reasons, again, the dollar has been so strong is that people are thinking, well, maybe the Fed won't cut as much now that we're going to have this stronger economy. If the Fed was going to do that, it would have done it. I don't think so. I think the Fed is going to cut as much as it can get away with. It would have done the same thing under Harris, and it's going to continue to do it under Trump. It will cut as much as it can. They're trying to claim that they're still restrictive. They've never been restrictive, and now they're less stimulative because they never got rates into restrictive territory. I don't care how much they want to pretend they did. The fact of the matter is they didn't, and that just by looking at the amount of debt, right? If debt levels are surging to all-time record highs, that is not a sign of restrictive monetary policy or tight money. What happens in tight money is people borrow less and they save more. Well, our savings rate collapsed to a record low. That doesn't happen with tight money. Tight money means you're rewarding people for saving and you're punishing people for borrowing. And therefore, you should get less borrowing and more savings. The fact that we got less savings and more borrowing means we were still rewarding borrowing and punishing savings because we had easy money the whole time. And so I think if Powell was going to now all of a sudden, be singing a different tune, he would have started. So I don't expect anything different from the Fed. But anyway, we got the press conference where all the interesting stuff happens during the press conference. And, gold did bounce back. It was down $80 on Wednesday. It rose back about $50 of it on Thursday, in part because of the rate cut probably and the press conference. But then it lost back $22 today. So half of what it gained back. So we closed the week below 2,700, I think 2,685, but still a very strong gold price, especially if you look at gold in terms of other currencies. It's been very strong this week. So it's just Americans that have seen the gold price go down. Europeans, Asians, people in Canada, Australia, they've seen a higher gold price in terms of their local currencies. But anyway, I want to go over some of the things that happened during the press conference, a couple of the comments. So one of them was that Powell admitted that the world had gone through an inflation shock, right? Like this shock. Like, it was like a surprise. It happened out of left field. We didn't go through a shock. The central banks shocked us, right? The central banks created the inflation. So they created the shock, right? So he talks about it like, they had nothing to do with it. Just, oh my God, this, who knew this was going to happen? It was obvious it was going to happen. I mean, you go back and look at my podcasts at what I said early in COVID in March of 2020, that we were about to have an explosion in inflation. Everybody was talking about the pandemic being deflationary. I was saying, what are you kidding? It's the most inflationary event we've had. Look at our response. We're flooding the economy with money and telling people not to work, not to produce. So, I mean, it was an inflation cocktail, obvious, but, they didn't see it because they don't understand it or they lie about it. So he says that the world has had an inflation shock. And then he said the problem is prices went way up and they didn't come back down. Well, yeah. Whose fault is that? Powell's policy is we can't let prices go back down. See, he wants 2% inflation every year, no matter how much inflation we had the year before. See, this whole inflation averaging went out the window. So if we have a year where we have 1% inflation, well, then we got to have 2.5 for a couple of years to make up for it, right? He's already said that. We have to average up low inflation. But if we have high inflation, no matter how high, we have 10% inflation one year, the next year, we can't have -5. No, we got to have another +2, right? The Fed says no matter what happened the previous year, we want prices to go up the next year. Because if they go down, that's deflation, and that's horrible. So he's now complaining that prices went way up and they didn't come back down when that's exactly what he wants. In fact, if prices started to come down, he would panic and print more money, right? So what his solution is look, prices went way up, and so now it's going to take a while for wages to catch up. See, that's what he's hoping, that look, prices went way up, and now they're going to keep going up, but now we want wages to rise faster than the 2 or 3% a year that prices, and eventually, at some point down the road, everyone's going to catch up, right? Because the Fed won't allow prices to come down, right? So but nobody points this out other than me when they just let him get away with all of this nonsense. Although I did remember one person at a press conference asked him, well, what happened to inflation averaging? And he kind of laughed it off and said, well, we're not doing that anymore, right? Because they only were doing inflation averaging when it was convenient, right? When inflation started to get high, right, they were saying, well, we don't want to fight it. We don't want to raise rates. So we're gonna switch over to this averaging thing because we have all this low inflation. But now that we have all this high inflation, forget about it. It's that never happened, right? Now another question he got was a good question. There were actually a few good questions, surprisingly, at this press conference. No good answers. In fact, most of the good questions weren't answered at all. He just did a cop-out like to this one. So somebody asked him what he thought, what impact he thought deficits were having right now, the large deficits, on the bond market and the backup in interest rates. Because now long-term interest rates, 10-year yields, they backed off a bit today, but they're at 4.3. But they're about, 70 basis points or so higher than they were when the Fed cut rates by 50 basis points, and now they just cut by another 25. And so this journalist asked him, do you know what kind of impact do you think these large deficits are having on bond rates? Now, that's a good question, and it's an obvious answer that they probably have a big impact, and they're going to have a bigger impact. But Trump's answer was, oh, I can't comment on fiscal policy. What a cop-out. First of all, he can comment on fiscal policy. That's why the Fed is independent. They're independent precisely so they're free to criticize bad fiscal policy. But now they say, well, our independence means we can't even talk about fiscal policy. Well, what's the point of having an independent Fed if they're afraid to criticize the government, right? The purpose or the point of having the central bank independent is because they're free to criticize the government. If they were politically, if they weren't independent, if they were controlled by the government, then they couldn't criticize the president. They'd have to toe the party line. The president would be the boss, and they would just, be a yes man. So to say that we're an independent central bank, but we can't be critical of the government, even if we think the government is making a mistake, it's wrong and it's a lie. There is nothing that says that a Fed chairman can't criticize Congress or the president. He absolutely can. Look, Congress criticizes the Fed all the time. The president criticizes the Fed. Why can't the Fed do the same thing in reverse? They can't. Paul Volcker, everybody says Paul Volcker was the last great Fed chairman. He was extremely critical of the government. He was extremely critical of deficit spending. And that's what helped, bring inflation down, because he beat up Congress on the deficit. Well, Powell refuses to do that. That's number one. But number two, the question wasn't about fiscal policy. The question was, are the large deficits, which are a fact of life, the deficits are here, right? Regardless of the fiscal policy that produced them, we have all these budget deficits. The question is, are these budget deficits having an effect on interest rates? The obvious answer is yes. I mean, you don't even have to ask the question because the answer is so obvious. But Powell can't even answer it because Well, it somehow relates to fiscal policy because it's the fiscal policy that produced the deficits. So therefore, he can't even comment on the impact those deficits have on interest rates. That's such BS. And then, he was asked again about the fiscal state. And all he would say is like, look, I've said this before. We're on an unsustainable path. That's all I could say. He says the level of debt right now is sustainable, but the path is not, which is all BS. Because if the path is unsustainable, the debt is unsustainable because the debt is on this path. And he doesn't know, right? You don't know for sure. Again, it's like the straw is on a camel's back. He doesn't know when the debt that is on an unsustainable path arrives at the unsustainable destination because it could be there tomorrow. Nobody knows. And so if you're on an unsustainable path, right, you got to do something, right? If you know that you're going to go over the edge of a cliff, you just don't know where the edge is, right? Because you're blindfolded and there's a cliff there. Do you keep on going? No, you're going to have to stop because you know that if you stay on that path, right, you're over that cliff and you don't know where it is, right? So it's another cop-out answer to try to say, well, it's okay right now. It's just the path that's unsustainable. Well, if the path is unsustainable, then criticize where we are right now and say, let's do something about it before it's too late, right? Because if we stay on the unsustainable path until we go over the edge of the cliff, well, then it's too late, right? So it's urgent that we do something right now. And who should be pounding the table about that? It's the independent chairman of the Federal Reserve. He's the one that should be warning the Republicans and the Democrats to do something about the debt right now, right? But no, he won't even answer a question that is tangentially related to the debt, which is like another question he got. Another reporter asked an astute question because early in his prepared remarks, Powell went on and on and on about how great the economy is, how strong the economy is. It's a great economy. Labor market's strong. Everything is great, right? Well, Trump just got elected because the economy is not great, right? That's why he won. If the economy was really as good as Powell thinks, Harris would have won. People would have voted for 4 more years of a great economy, right? So this reporter asked the obvious and good question. He asked Powell, what do the election results tell you, Mr. Fed Chairman, about Americans and their thoughts about the economy, right? That's a good question because he says the economy is great and voters say the economy is bad. In fact, all the exit polls, again, I mentioned this on the last podcast, but the number one and the number two issue on the voters' mind, which is really all the same issue, is the economy and inflation. So the economy is the big issue because it's bad, right? If the economy is good, it's not the issue. People are concerned. They have other things, right? If the economy is good, no problem. I got no complaints. That's not my issue. When inflation is low, it's not the issue, right? Inflation is only high up when it's bad, right? And so he's seen these polls, right? People hate the economy. This great economy that he thinks is so great, the voters hate it, right? The voters are saying, I want change. I can't take this great economy anymore. I've had enough of it, right? It's too good. We got to change, right? So she asked Powell, what did you learn from this? Did you learn anything about what people think about the economy? Powell's answer, I can't comment on the election. I can't talk about the election. So that's it. She didn't ask him, or I forget if it was a gal or a guy. I think it was a gal, but I forget. But he wasn't asked to comment on the election itself, on whether or not, he liked the outcome, didn't like the outcome. He was asked, what did you learn about what Americans think from the results of the election? That's a very different question than commenting on the election. But he didn't want to touch that with a 10-foot pole because he doesn't want to acknowledge that people think the economy is bad because he keeps talking about how great it is. So another cop-out where he says, well, I can't comment on the election, right? I have to stay out of everything because, I'm independent. Again, being independent doesn't mean you have to keep your mouth shut and you can't speak your mind and you can't be critical. It actually means the opposite of it. When you're independent, right? You're not influenced by politicians, so you can say whatever the hell you want to say. You can criticize whoever you want to criticize, and that is exactly what his job is. But he just has cop-out after cop-out, standing behind the Fed independence to basically be completely dependent on the government, because he doesn't want to criticize the economy, doesn't want to criticize the deficit spending. So he just shuts up and claims that he's not allowed to talk. But the best question and the best answer, or the worst answer, depending on how you're going to look at it, was at the end of the press conference. And if you haven't seen the press conference, you got to watch it, and you can fast forward to the end. And it's the last question. And I think it was a woman, actually a very attractive woman, asked this question. I think that's who it was, the last one. And she basically asked a very simple question, very simple and a very insightful question. She said, what's your plan for stagflation, by the way? And then just look at the expression on his face, right? I mean, he almost like turns white, like he's like, holy shit, I can't believe that this question has just been asked. Like, what is your plan, right? What's the plan? And so after like a pregnant pause, and he kind of like, he says, well, our plan for stagflation is to hope there is no stagflation. And then he kind of laughed, because he realized how ridiculous that sounded. I mean, what kind of plan is that? Your plan is to hope it doesn't happen? I mean, she didn't ask, what are you hoping for? It's like, what's your contingency, right? Because obviously it's possible. So what are you going to do? That's the question. Not what are you hoping is going to happen? What's your plan? They've got no plan. That's why they hope it doesn't happen. But, Murphy has a law, right? Anything that can go wrong will go wrong, right? We're going to have stagflation. In fact, it's going to be worse than stagflation. Right? It's going to be inflationary depression. But even if the Fed doesn't think we're going to have stagflation, well, what about a contingency plan just in case? How about letting us know, hey, yeah, we don't think there's going to be a stagflation, but here's our plan. No, they've got no plan. I think he even said, knock wood too. Like, they're just praying to avoid stagflation. What kind of business? If you had invested in any kind of company, and you say, hey, what's your plan, for a recession? Well, we're just going to hope there is no recession, right? No, we don't have any contingency plan. If something goes wrong, I mean, what if anything? I mean, everybody talks about Elon Musk, and he sends these rocket ships. You know how many like fail-safe and contingencies they have in these things in case something goes wrong? They don't just hope nothing goes wrong and so have no backup systems. And no, we just hope nothing goes wrong. Of course, you hope nothing goes wrong, but you have all kinds of backups. You have all kinds of contingencies. But here's the reality. The reason the Fed doesn't have a plan for stagflation is because it can't do anything. That's the reality. That's what people should get from this conference. If there's stagflation, we're screwed, because they've got no plan. There's nothing they can do in stagflation. What are they going to raise interest rates to fight the inflation and crush an already weak economy? Or are they going to lower interest rates to stimulate the weak economy and send already high inflation surging? See, they're damned if they do, and they're damned if they don't. So what he should have said is, well, the reason we don't have a plan is because if that happens, we're all screwed. We got nothing. That's it. Turn off the lights. The party's over. So you all better pray and hope that we never have stagflation, because we're done, right? Well, if we are in a situation where if something happens and we've got no plan, we've got no contingency, we're in a lot of trouble, because it will happen at some point. I think it's already there. I think we're already early in it. And I think that, the Trump tax cuts will light a bigger fuse for that. And we're going to accelerate into that. And the Fed's got no plan. So what I thought people should do, the minute you hear that, it's like, I'm getting out. I got to buy gold. I gotta sell dollars. Now, people are doing the opposite right now because they're still, in la la land. on what they think is going to happen with the economy. And they're dead wrong. And again, they said the same stuff. When Donald Trump was elected the first time, they were saying the same stuff. I was one of the few people that said the tariffs aren't going to work. The trade deficits are going to get bigger. And you know what? They got bigger because the tariffs didn't work. Trump was saying, oh, we're going to cut the deficit. I said, no, he's not. Look what he's doing. Look at the budgets they're passing. And so all the hope and all the pie in the sky forecasts when Trump was first elected as a game changer to drain the swamp, it didn't happen. The game stayed the same. The swamp is still there, right? And now, yeah, he's surrounded himself with some more free market, libertarian-oriented people this time. Unfortunately, a lot of them are crypto people, and they're more concerned about setting up a strategic Bitcoin reserve and getting no taxes on Bitcoin than they are about anything else. And it's unfortunate that that's a sideshow. But at the end of the day, it's the same Congress, right? It's the same Senate. It's the same House. A few of the faces are different, but pretty much the same. They all want to get reelected. Nobody's got the stomach for any cuts. And why should they? Nobody promised that. So I think that's a very telling Fed meeting. And, you should act accordingly. You should take advantage of the Trump mania and fade this trade. Doesn't mean it's not going to go on. And maybe you'll sell out of your U.S. stocks and they'll keep going higher for a while. And maybe you'll buy more foreign stocks, and maybe the dollar will go a little higher. And so those stocks will have a headwind for a while. But there's no way to know. I mean, there's no way to know when this euphoria ends, how quickly the honeymoon is over. It could be next week. It could be next month. But take advantage of it while it's going on. So again, you should contact your Euro-Pacific rep at Euro-Pacific Asset Management. If you have an account with me, you should talk about ways of adding to that account, putting more money into the account, getting more money out of U.S. stocks that are rising into the foreign stocks and take advantage of the rise in the value of the dollar, take advantage of the emerging markets. They've gone down also on fears of tariffs. The tariffs are going to hurt us more than they're going to hurt them. That is always the case. We think that we're hurting our trading partners. We're just hurting ourselves when we make imports more expensive. Because the foreigners could still produce, they just find other customers or consume themselves. So people still don't understand the dynamic of tariffs. So that's weighing on the emerging markets. So buy them while they're down. And again, look into my funds. If you don't have an account with us, but you want me to manage your money rather. I've got 5 mutual funds. You can learn about all 5 of my funds on the Europac website at europac.com. And you can get the no-load version. So if you are working at Fidelity or Schwab or any of the discount brokers, make sure not to buy the front-end load version because you're just going to put money in Schwab's pocket. They don't need any more money. Keep it in your pocket and find the investor class no-load. That way you get more shares for the money. But it's the same portfolio either way, and we manage it. And, I don't think that, this again, rally is going to last too long because the problems are too big. So while you have the opportunity next week, do try to have these calls. And if you don't have an account with me, I know there are a lot of people who probably listen to the podcast because, far more people listen to my podcast than have accounts with me. And so if you don't have an account, this would be a great time to get one started. Anyway, have a great weekend, everybody. If you like this podcast, don't forget to like it, thumbs up, leave a comment. And again, as I mentioned earlier, sign up for our free newsletter at Schiff Sovereign. Bye for now.